We are talking about a holiday-shortened week this week, kicking off the week of Christmas with the Dow down 418 points right now. The Omicron variant and inflationary pressures weighing on investors. The S&P is down 60 and the Nasdaq down 234. That's 1.5%. Joining me right now is Oxbow Advisors Managing Partner Ted Oakley. Ted, welcome. You say Oxbow is starting to see cracks in the armor. Tell us what you mean as we watch this market sell off 400 points this morning.
Well, Maria, what we're starting to see is, if you look at the lead stocks that have been the big lead for the year, the top 8 or 10, they're starting to show some weakness, which is where a lot of people are invested. But we're starting to see commodities roll over a bit as well. And I think this inflation thing is probably going to be a headwind here for people. So we'll see how that works out. But for us, that's why we're starting to see some cracks and everything.
Well, yeah, I mean, look, you heard the Federal Reserve last week remove transitory, pretty much telling us that we're going to see inflation in the new year. Wall Street is reacting. Goldman Sachs is cutting its forecast for the GDP for the next year. They've got a GDP forecast of 2% in the first quarter. What does the failure of the Build Back Better bill do about this? That's what prompted Goldman's move to cut estimates on the economy. Tell me about the growth story from your standpoint.
Well, what happens with that not coming out, Maria, is that, there was a lot of money that was going to be pushed out in the economy. I'm not certain all of it was really going to be used for the right purposes, but it was still going to be out there. And so that was going to be much of like 21, where, we had a lot of money flow out to different areas, and all of a sudden you just have a lot more cash coming. And since that's not there, and now you're losing child tax credit that comes in December, you start back paying student loans. There's a lot of things that are coming together to probably make that slowing happen.
I see. So, I mean, I would have thought that the idea that you're not going to get this major boondoggle in spending and tax increases would have been a positive in terms of the investment class was concerned. But it's more that it's selling off because of the impact that spending is not going to have. What about the impact of inflation should that have gone through?
Well, I think that would have increased inflation, Maria, for sure. I think it would come anyway, though. You'll have a certain amount of inflation no matter what. But that would have certainly pushed it even higher because you would have more money out chasing what we're trying to find now, which is a lot of things are not, you can't get a lot of things now. So I think that would have had a bigger impact, but I don't think inflation goes away because of that. I think you'll still have a degree of inflation no matter what.
So how do you want to invest in 2022 then, Ted? Give us your long-term stock picks and how you want to be allocating capital within the coming year, knowing what we know now.
Well, Maria, we have 3 strategies, but in the growth strategy, we're looking for companies that can grow at 15% a year over the next 5 years that have corrected somewhat. Right now, that would be Charter. It's corrected about 200 points. You look at PayPal. Both companies we think can do well no matter what, even if you have an economic slowdown and that sort of thing. On the income side, we really like the pipelines, enterprise products, almost a 9% yield. It competes with cap rates on real estate, really, at that level. And then we have, we look at physicians. And hospitals. You look at those 2 companies, MPW and Doc. We like both of those because they're basically recession resistant, and we like the yields on those as well. And then on the conservative income side, oddly enough, when things slow down a bit, you have to have, on this curve flattening, you have to have a lot of money short, but you need some money long.
Sure. All right, Ted, good to see you this morning. Thank you so much. Ted Oakley joining us this morning.